Hey everyone, just doing a quick sound check. Awesome, folks. Welcome everyone. I've been contemplating, this has been a wild day, and I have this history that you folks are learning about. I'll talk about numbers and they just happen the next day. They don't take 2, 3, 4, 5 days, not anymore with this volatility. And we saw some things happen. We actually traded down and we were 100 points lower here just a little bit ago. So, and I was still catching up with that thing called sleep when all that was going on. And of course, you know, we're seeing this big comeback here right now as we've got what, hour and 20 minutes to go. So I thought I'd just go ahead and hang out with you folks, see what kind of things on your mind, and talk a little bit about what I'm seeing here. And I want to go over to the daily chart. So probably what we experienced in 3 days, starting from the reversal day, we probably have one more day in this sequence, but we've already hit some of the numbers that I thought we'd hit, which would be the 40-day moving average. And I'll bring up a couple of these things just to show you here. And the low of the day today has been 33.49. You'll see the slow average, which is the 40, is 33.42. So we went all the way down, hit that 40. The 40's got enough momentum to hold as support, and we bounced. And this is kind of one of those moments where you see why I use this 10-21-40 simple. It really shows exactly where these patterns are likely to come into. And you'll see the last time we go back to the June 9th, we had the same thing. We had a 3-day move, went to the 40-day moving average. It was in an upslope. Let's see what the rate of change was at that time. It was 0.25, which was, wait, hang on. It was 0.21. This time we're at 0.18, and so we're bouncing off of there. We're in the middle of the day. You know, it's possible, I guess, the way this thing's trading here, that maybe we could close higher on the day. So a lot of things are happening quickly, and of course, all the news that we had come out. Right, I was just looking at some stuff. You know, maybe the BLS is becoming pretty lame. They 8.4% unemployment. 1.4 million new jobs. They call them new jobs, but they're actually, I call them recovered jobs because of people coming off furlough. And I've been talking about these, I guess the metrics coming in better. So what is this all about? You know, we're looking at here. One second here, just you know, Apple's still underwater. But, you know, that, as I mentioned also in last night's video, I was talking about the possibilities that there's going to be bargain hunters around Apple. So it's not just going to collapse, and it shouldn't collapse. Although, as I keep hammering on all week, and privately, some of folks that I talk to, I've been talking how bogus this whole situation with the splits and how it was bullish, and all of the rhetoric around the splits on Tesla and Apple and what all that meant. So we're, here we are. We got 4 times as much Apple stock as we had before. And like I said yesterday, the Tesla guys, they just got to be high-fiving each other in that boardroom. This is brilliant what's going on. It'd be an honor to be part of that team and all of that. These guys have, they get all the money raised that they're doing. They're going to be good for a while and be able to execute their business plan. And that's what running a company is about, and I made the comment yesterday, Tesla could give a crap whether the stock dropped 10% or not. So, we'll go through that 3-day trade. I know it didn't open. Yeah, and what my goal is, I just want to talk a little bit about this rebound that's happening right now. You recall in last night's video, the critical number was 3320, but the reason why 3420, the reason why that was a critical number is that was the 21 period moving average. I knew if we closed under that, we would go to the 40. Well, the market just went ahead to the 40. And I'll draw up some of these patterns here, and then we'll move on and we'll hang out to the close. It's pretty funny. I was realizing I've done 4 live streams this week now with today, and 5 videos, and been an interesting week. But that's how it goes when things are going. Yeah. So all right, let's take a look at this pattern here. What I want to show you is this, what's already happened. I'm going to take a couple things off the screen, and so you can just see the bar charts. I want to take off the grid, and this pattern is becoming pretty already obvious of what happened. And like I said, it really reminds me of June 9th. This is what we're looking at here as far as I'm concerned. And if you recall, we got the RXT sell for Thursday morning, 2 to 3 days sideways to down. We definitely got that. I guess everybody forgot to, it's funny, the trolls are out in force right now, telling me how I missed it and all that. Obviously, they didn't watch the video. They looked at the thumbnail, and they also didn't realize that 3600 had a question mark after it. So, but yeah, so we've already done this move. But let me draw. I'm going to draw in what the likely pattern is here to unfold. And so we get this pattern here. This move down is going to be most likely an A wave. We will get a retracement. I'll define this a little bit, what we can here, and then we should get another move over here. This 40 period moving average should move out here, and we should get a pattern. And this should be a fairly short-lived pattern, but it, as I mentioned a bit in commentary last night, it's possible we're going to get a complex correction, and I'm going to go through all this so you understand exactly what's going on. So a complex correction would be similar. I'm going to box out this area over here on the left. Yeah. And this box area here, this is where you get these CX, ABC patterns, and then you get the move up. And we got a simple ABC on this run. So as we come into this move here, this is likely, and I've been advertising this as a 4 to 6 weeks of sideways correction phase. It will be very interesting to see how the WaveTech database comes together, all of that stuff, because this is going to be this configuration here is really what we're most likely going to see. So when these patterns set up like this, they take a while to unfold. It looks to me like they're going to try to close this thing. I mean, we're only down 14 right now on the cash S&P. The futures are down 22. There was a little mismatch last night, but so we could end up closing higher on the day after printing down to 33.49. So 100 points off of the spike low that we have. So this would be a classic A, and then we get a rally up. So let's talk about what the possibilities are for this retracement rally, because I'm already ready to proclaim this thing done. And so I know we got a long weekend ahead, so I was just wanting to set up some ideas before the weekend. But let's take a look at, let's just see what the pattern's telling us. So the possibilities here, just for a simple Fibonacci high-low retracement from the top that we saw 3 days ago to where we are right now, we would see a 50% is 34.74. We're 40 handles from that, but most likely we'd see probably a full-blown retracement 35.03, 35.15. Everything in this type of volatility range that we're in tends to go to the extreme. Everything is extreme. Nothing is like typical. Like if you're understand Elliott wave, or you're looking at Fibonacci numbers, they tend to go to the 0.618, the 0.76. It absolutely goes this stretches the rubber band every time as far as it can, and all the time periods which it takes to do these things are compressed substantially in this type of volatility. So it will be interesting. The two key numbers for today's close will be 34.21, and then it will be, if we close higher or closing higher on the session. Yeah, I love these things. I used to be able to use this to trade. I just got a flash on my phone. Dow turns positive late in the day, comeback led by Apple. Okay, it's a classic, right? This is exactly what we're talking about, and those are the bargain hunters and that are going to show up in this kind of environment. There is always, in an uptrend, when you get these type of very quick snap retracements like we just had, then you're going to get all types of gyrations around these moving averages and the patterns and the retracements and everything I'm setting up for you right now. But yeah, that's just classic. Let's so I drew in the pattern. You get an ABC here, probably an ABCX ABC. It's going to be somewhat difficult because like I set up when I first started the live stream, what you really are seeing here is, this very fast retracement. So when we got the RXT signal on for Thursday, it's 2 to 3 days sideways, and it can extend. But I'm going to put the market grid back up, and you're going to see what the container is going to be on the market itself from the standpoint of what these ranges are going to set up like. And the one thing about the market grid that you should understand is it is adaptive to the volatility. So when volatility kicks up like this, it adapts and it starts to change those projections as it goes through the days based on it's a little bit of a lag, but it works out really well. And then, so you'll see, let me put them back up here real quick so we can see this. So let's just summarize. Probably 3503 to 3515 is going to be the number. Two numbers today. 3420 will probably close above that, and then it could close. If it closes higher in a session, then that would confirm. And right now you've got a upward reversal pattern. So everything, like I said, everything's happening in a compressed mode. So let's take a look, and let's put the grid back up. So what, like I said, this is probably the bottom of the A. The top of the grid right now, let me bring that on screen so you can see it. The top of the grid is right now 3512, 3529. That will contract just a little bit on when we come in for Tuesday. When this thing updates after the close today, there will be a contraction of this thing, and we'll probably be right in the numbers I just talked about on the Fibonacci range from the standpoint of where the retracements are. Yeah, so I see on a timeline that Simpler Trading Guys explained the sell-off was much largely from fund liquidations, forced selling. It's actually was a rebalancing. I talked about that, I think, last week in the videos, that these are the type of things that you're going to see in this environment. They happen around the end of the month. So we did see that happen. So, but that's not what's driving this. Okay. What's driving this is simply taking the largest capitalization company on the planet and quadrupling the amount of supply of stock. That's what happened. You know, people think, oh, they made it cheaper. No, they quadrupled the supply of stock. And as somebody pointed out on the chat line, is some of the stock didn't get into the account until you could have still sold some of your stock. So when the split came, you would have been all right selling some of that ahead of time. But the split stock, I've said this a couple of times on the last several days, is that you always want to sell the split stock. I mean, why wouldn't you, right? And a 2-for-1, sell half, take that money, put it to work somewhere else. And typically these companies don't split and then go up right away. There is a history of it being positive for a year looking forward, but not instantly. They're usually a sell. So we got a couple of days sell, and I guess they punished all the folks thinking like that was the buy signal. So anyway, what I've set up for you is the ABC pattern back to 35, probably 35.05 to 15, and all those, and just, yeah. So another good, matter of fact, I should probably talk to her. A good friend of mine is Carolyn Bordelwin. She actually is with Simpler, and Carol and I've known each other since Chicago days. We've known each other so long we don't even know when we actually met. It was back in when she was on a Merck and I was on the Board of Trade back in the 80s. But it might be kind of fun to bring her on and talk Fibonacci stuff. She's the Fibonacci queen. But the whole pattern that's going to set up here is going to be dynamic. It's going to be fast. We're going to take maybe 3 weeks, maybe 4 weeks, and we saw a lot of liquidation. So let me go up here and put up. Let me put WaveTech up for just a minute. And I discussed this last night. I want to show you two things on WaveTech that are important to understand. It's interesting that if we go to the all stats page, So I go to daily searches, and then when we look at the all stats, we had 5,200. We had a net 5233 cell signal, so 5,233 net cells. We had a total of 5428 versus 195. Thanks a lot, Gino, for the super chat. Appreciate it. If you're long, when you stay long for the weekend, yeah, if they close over 20 or they close higher in the day, yeah, you can do that. Yeah. We exited, this is what I want to show you. We blew out of a lot of positions on Thursday's open. We got a lot of sell signals. We got a lot. The database was 90% long. Now it's 40. I've been rattling on about this on the channel for literally weeks, that I wanted to see this wash out of the short-term database. Well, we're getting it. That thing got so long in the tooth. Some people call it overbought, whatever you want to call it. We got so overbought that's what we're seeing here. And by the way, yeah, so this, what you see here, you see the sentiment on a short-term level is negative. And when this database gets destroyed at this level, this is so good that this has happened. And I set this up really well. I was joking one day, I think on a live stream or something, that it'd be nice if we had options we could trade the database. I would very seldom be wrong. I mean, it's interesting. It's a 0 to 100 meters, so it only goes down so far and only goes up so far. And we did go to 90%, which was about a standard deviation and a half. Thanks, Supa. Appreciate it, man. But the whole pattern is setting up here is actually a healthy pattern. I don't think this is the end of things, and we'll go to the weekly analysis, and just so you can see what's going on there. And I'll go ahead and chat for a little bit longer about some of these setups, what's going on. Now we'll do some individual stocks and things. We'll go through Apple and what have you. But just looking at some of my notes from last night, and there's been a couple things that have happened, over the last week or two, and I've showed you this several times, and it goes to sometimes the clarity when you're being an analyst, you're figuring out your trades, you're figuring out the type of things that that what you're looking at and how you're going to trade and stuff. This is something, I've got a sheet of paper. I know you can't see what it says on here, but these are my work notes for commentary every night, and set up. They're usually two-sided paper. Sometimes I'll have 3 pages of this stuff. So I go through and do an analysis every night, go through some of the things that we're doing together right now. Look at the database, look at the configuration of all the PPMs. I'm literally a one-trick pony, folks. I read Edwards and McGee in 1980, and it was a piece of crap. Nothing in that thing was right. I kept going, none of this stuff works, or maybe I interpreted it wrong, but none of it worked. And so I realized then that I had to do my own work, and I know I'm presenting my work on this thing. And a lot of folks, I wish there had been stuff like this around to be able to learn and be able to learn how to trade. But I had to do everything on my own. Matter of fact, I did get an Apple II in 1980, so I did have a computer and I did have VisiCalc. If you watch a video I've got about my career, you'll see that was a big thing. Thanks, Dustin. Appreciate it, man. But I just feel like anyway, you've got to do, you still have to do your own work. You have to take things that I'm telling you, trying to put it together, and because I don't normally put out individual, like buy here, sell here, do this trade. I have done it more lately. The Apple trade, and we'll go through that here in a minute, is one of the first times that I've went out into that space and making those kind of things out there. But putting out trades. That's not what I'm trying to. Most of this channel content is about perspective, and I've got WaveTech on the screen. And the reason why we got WaveTech up here, this is, if you ask me, Bob, what do you think about a stock? I'm going to go to see what our models are telling us. This is my life. This is the world I lived in. I built this platform in 1998, so a long time ago. And some of you have seen our next version of software. So this is, I'll bring it over on screen. This is our portfolio expert software, and this is a portfolio management system. So you can run mutual funds, ETFs. You can do all kinds of stuff with this thing. This is a very powerful tool, and I built my entire quant environment as I've been a TradeStation user since 1992, and it's great. I've got everything that you see in TradeStation. I only use my proprietary indicators, and I thought we were going to be able to get this thing on the App Store at TradeStation this week, but it didn't happen. So I'm hoping that this long weekend everything will be able to get solidified. I'm sure all of us, I don't know, all of us here in the U.S. I'm looking forward to the long weekend. I'm actually excited for a holiday. I mean, we've all been locked in the houses and all this crud that we've been through on this planet, right? So it sounds good, good old America, Labor Day, have a barbecue. But the reason why I show you all this platform, it encompasses a ton of stats. We have 16,000 symbols. So I always tell you folks, you gotta have a perspective. But back to what my point was, is always to make sure you've still got to do your own work and put it together. But that's why I put this tool out there. This old clunky platform that I have on the screen right now, but it works. It's an old classic car, and we're starting to get quite a bit of traction on the software. So that means it's getting us closer to being able to rebuild the platform in a nice, powerful web app. Got some great ideas. In fact, I have some meetings this coming week that could move this project in light speed ahead. I'll never be like Elon Musk, but we got some really cool stuff going. So, and I actually thank all you folks on YouTube for actually inspiring me. So let's go back to work here. Oh, I did want to mention one thing before I move on. I want to go to the weekly database, and right now we have 70% of the symbols are long, and I didn't notice any names. I know a lot of times some of our institutional clients will hang out with us, and but this is more or less for them as we come into long weekend. I expect we're going to. It depends on how we close. If we close above 21, we're 34.20. We're going to be in a better shape than if we close under it. We might see some intermediate sells. Chris, thank you so much, man. Appreciate it. I really appreciate it. So, yeah, as far as the database goes, we're going to see this is huge, because I'm going to go to the all stats page on the platform, and I haven't figured out if there's a way to zoom in on anything here. But over on the right hand side here, it shows optimized weekly 205 market days is a typical holding period on these models. Right now, the average current duration is 43 days, or otherwise we're 21% into the holding period, which tells me that we've got 80% to go. Normally they don't go 80, they go 70 to 80 range. And so we've got at least another 140, 160 days on average of the trades that have been generated by our intermediate models. And that's a big number. So that tells us there's still a longer term trend that's going to unfold. but it's not going to be, we're not, this is not the environment that we're going to roll over in. And this page here reflects that about as good as anything. This shows the traction on the models, and I covered this a little bit. This has everything to do with what's going on in the markets right now, is that we've seen this big ramp up. We even got a V in the database, right? There's V's everywhere. And what we're seeing here is we've moved up. We're actually, you can't see this chart, it doesn't have a good enough edge, but we're actually up at 69%. So we're way up at the top. And typically when we get up to that level, we'll see some sort of sideways correction, that 4 to 6 weeks. Maybe it ends up to be longer. We're coming into an election. Maybe things get to the point where we're just going to be in a consolidation range until the big decision is made. And then that will set the tone for whatever is likely to happen from there. And we'll just see how that works out. But this is really a typical, very orthodox situation that we're in after this rebound as far as the database goes. Yeah, I would argue that the fast rebound is healthy, but you know, we'll leave that for another time. That's how bottoms are put in actually. So let's take a look at. So we're trading at 45. We're nine handles now on the cash from going positive. What's the Dow Jones doing? Dow Jones is slightly negative, down $8. Yeah, so the Dow Jones reversal 600 points. That's a big number. Wish I could have got to you guys earlier, but it's it is what it is. I do need a couple hours of sleep. So, I want to go to the weekly graph here real quick. Now we spiked through the grid on the week 3440. I talked about this, I think, on Wednesday's live stream, and that was the STX number. So we spiked through that by 100 points, by the way, 33.49, and now we're back into the grid. And a lot of times I will talk about a situation like this when we spike outside of these are not these volatility based lines that are being developed here. You'll see when we get into high volatility, the patterns expand out and they widen and then they contract as volatility changes. So that's important to understand. We're probably going to see some broadening on a weekly basis, since if we look at the last 3 bars, you'll see that there's going to be an expansion of the market grid that comes out. And I think I actually have it available, I think, after the close today, about 3 o'clock. So I'm hearing a sound comment here. Everybody hearing the sound okay? Yeah, somebody asked, is the correction completed? The first leg of the correction is completed. We probably trade up to 35.15 or so. I'll be able to define that in the next several, probably maybe Sunday night. I'll be able to look at it, or Monday night, and then we'll take a look at it. Yeah, so The PPMs on the intermediate basis, we're at 1.32. Even with this downtick today, PPM 1 is actually is maintaining that 1.32, and that is tied to this 10-period moving average, which is at 32.66. I talked a bit about this last night. I'm sorry, it's 33.09, and that will be around 33.40, 33.60 range based on the rate of change, based on the percent change on a weekly basis. So right where we printed today was that number. And I discussed this in last night's video. This is where I thought we were going to go. Well, when the moving average updates tonight, you're going to see basically that it's going to look like we hit the 10-week moving average. The 1.32 number, 31 right now, is going to tells you that there's less than a 10% probability to trade below that line at this time. So next week, roughly 33.40 to 33.60, basically the lows that we saw today will be the bottom end of that. Now, like I said, it's going to be interesting to see what goes on. We were only down 9 handles, so we got lots of volatility. We just dropped 10 handles just like that. And there's air pockets and all that kind of stuff. But this pattern is still bullish. We're likely to go into a broadening sideways pattern. And like I said, I'm estimating 4 to 6 weeks minimum. That's what my expectation is. Yeah, so if somebody wants to get me 1,000 likes, that sounds fine. Yeah, so so that's the weekly. Let's go and just take a quick glance at the monthly. I'm going to do two things. I'm going to bring up what I call, there's the market grid, but then there's also the matrix, which encompasses daily, weekly, and monthly. Let me bring that up for you real quick here. This is last night's grid. We hit, we basically, S3, 33.28. 33.28, the low 33.49. So we almost did an S3 print weekly. And we also just almost did an R2, 36.13, 35.53 was the pivot number. We spiked up to 88 the other day. And of course, that was the climactic high right there. And now we've come back down. The most that I was looking at this month was 36.13. And so somewhere between R1, R2, I think you can go back and listen to that video and see that's exactly what I thought the expectation would be for the month of September. And now we've traded all the way down here to 33.28. So most likely the rest, we're day 4. This is September 4th. Because of the 10-week moving average, looking at the matrix and the market grid for the monthly projections, we've probably hit the extremes for the month on both ends. We've seen the extreme. We've seen 36.13, 33.28, and that suggests to me that we're going to be locked in that range. So there'll be trading opportunities around those numbers. Now we're probably 35.15. I talked about a few minutes ago. I'll refine those numbers after the markets close and I do my work for this weekend and for Monday night's video. But that would be just on a general sense where I think things are likely to go at this point. And that's, so the matrix, we're now looking at monthly numbers, and this is why I talked about this. If you look here, 3440, I talked about that on live stream on Wednesday, that was an important number. And then what we're looking at here, we've now exceeded that. 3447 was S1 on the monthly, and then 3387, and we printed just about an S3. So I'm going to call this month, as far as the range, probably done. I don't think we're going to go down to a 10-month moving average. Let me move this out of the way. The 10-month moving average is 3127. It is possible, but you know, we're looking at some reasonably robust PPMs, and PPM2 is continuing to expand. It's at 151. PPM1 is down, taking a little bit, lost some momentum, but it's into that maintenance mode. And I talked to you folks a lot about this, so let me draw it in. And this works on all levels of trend. So this is that, I always talk about momentum precedes price movement. We'll just draw this up here. And so this is the first kickoff, short-term, intermediate, ramp up, and then this is where the trend gets confirmed. And then all of these indicators do this. They go into this, they flatten out, and then they go into maintenance mode. And the maintenance mode is somewhere above zero. And I think, yeah, this is probably, I drew that line a little high, but just, you're going to stay on this. So when we got all these triggers, this is the trend that we flowed through, and this is from 2009, what we're looking at here. So this is the secular trend that's unfolded. We saw I'm going to draw some blocks here. We did see, what I talk about is these, where the grid actually widens out, we get volatility, and then of course we had the ultimate volatility this year, and probably the ultimate rebound. And as long as, you know, I love this channel. I so enjoy doing this with everyone, because what's really happening as far as, I guess, such a perspective. I love these guys that are out there going, you know, the market's going to drop 50% and all that. Maybe it will. And if you look at yesterday's live stream, I brought up some of the long-term stuff, and I plan on doing that video on going through the signals for 100 years on the indexes and demonstrating to you that this logic, I've told everybody for years that the logic, the models that I built, they don't miss trends. They don't get caught. You know, they're not going to go to zero. They're going to get out. They're going to manage the bigger picture, looking at elements like this really, really well. And it's nice to go back 100 years, because when I developed the models, I used the data that we developed the models on was actually from I'm trying to remember the right number. It would have been from around 1988 to 1990, maybe something like that, or 1980, yeah, 88 to 98. That's when we were initially doing things. But prior to that, I built the very first model in 1991, and the process that you're seeing here was actually, the concepts and the philosophies were built in 1984, so a very long time ago. And this has been my entire career. I'm one of those guys that figured out something and never changed anything, just kept doing the same thing. And if you get lucky enough to find something that really works, don't let it go. Don't the first time. This is advice from a very long dedicated market person, is don't kick it out. The reason why we started, those of you using WaveTech, reason why we put the ER ratio was we didn't want to throw away a good process just because it went through a period where it wasn't working. A lot of people will build a model, they'll get into that model, and then they'll have some losses and go, oh, that one's no good, it didn't work. They're never going to work all the time, and you have to have a large enough sampling and all that. And that's the other thing that I hope I can get together. Maybe I can get together with my old partner, Dave, and see if we can chat out what we did together. That was a great collaboration back in 1997, 90, actually 96 is when we started our collaboration. So anyway, enough stories. Let's take a look at Apple. We'll just stick with the monthly for a second here. We'll do a top down. So Apple's bounced pretty good. The low today was 110.89. Look at STX. You folks checking this out? STX is 110.98. But we basically went right to the STX. This is why I've got to get these numbers at $12 trade off of STX on a monthly basis. That's why I've got to get this grid out on these stocks and things. It's just making me crazy, actually. So let's go to the weekly, see what's there. I'm sure it blew through everything weekly. It did. It looks just like the other charts. The 10-week moving average right now is 107.98. So we got pretty darn close to that. And look at this range. We have, I guess if I turned it into a candlestick, we have this engulfing pattern, right? So we get this monster reversal pattern on a weekly basis. And typically, especially if we close here, since we're at the coming into the close here in 30 minutes, is if we close in the middle of this broad range, let me show you what that sets up. Let's go through that, because I know a lot of folks are trading Apple. So this is what is going to set up here on Apple. Okay, so when you get this big range like what we've got right here, this big bar, okay, this one here, when you get that kind of bar and you close in the middle of the range, if we close in the lowers, I have this rule I put out. You have to close in the lower end of the range, and the reason why that's important is this. And this is the way I look at daily bars, and this is the way if we close in the lower 60% of the range or worse, the imbalance of orders were most likely sell orders because they pushed the price down. And it also tells you about the aggressiveness of the traders. Most people think volume drives markets. It doesn't. What drives markets is one-sided aggression, that the sellers are very aggressive. And that's why when we were doing a live stream yesterday in the middle of this meltdown, as I was talking about when you look at a level 2, the bid-ask thins out, and now they can just, the volatility starts to go back and forth. And that gets you, when you see that type of action, that's what builds volatility, but it also shows you that a one-sided trade, the sellers will come in and they just hit the bids and then just knock it down. I won't go through the educational course. So one of the first things I used to do when I taught traders about intraday market movement, but on balance, what happens is if you get an imbalance and you have an aggressive buyer or seller on a mass, especially in a symbol like this that trades, monster amount of stock, when you get that kind of imbalance, that tells you a lot about the sentiment in the stock just by where it closes. because it's closing at lower in the range. If we close in the middle, then that's going to set up a pattern that will most likely work within this grid. And we might have to go to a monthly, but you're going to get a high level consolidation. I talked a little bit about this. This is probably a wave. I draw this up going from this last sequence. It's the same thing I went through. I did a deep dive on Wednesday's video. I think they're all tagged. If you go to the review of Tesla on Wednesday's video, you'll see I did a deep dive on Tesla, maybe 20 minutes just on Tesla. And the same thing on Apple that day. We ended up 2 stocks. Then I probably spent an hour on them. And what we see, this is most likely a wave 3, and there's another move to the upside after this thing is done. So these markets are not done, I don't believe. We'll watch how the database. I am the quickest guy you've ever met and flipping a trade, because I remember several weeks ago we were at 30 down where we were today, 33.40 or something, and I was looking for a 2 to 3 day move. We're looking down to a 32 handle, and we got a reversal on a Thursday. And I went, nope, that's not happening. Next day, we're going up, 30, 34.60, 35 and change, 35.50, which is where we went. And that you have to be able to make those kind of switches when you're trading and being able to make these decisions. So here we are. I just hadn't looked at the screen. We're down 46 cents on a day on the S&P. And you went from minus 600 to plus 43 right now on the Dow Jones. And, this is actually a really good sign, and it solidifies, validates everything I was just talking about. And when we're looking at this pattern, so looks like, what we've got, Apple actually went positive too. Apple's now up 1.25%. And I said last night that we're going to have the bargain hunters. They're going to come in and they blow this thing out. And now we're setting up exactly this pattern. So S&P, we haven't looked at NASDAQ. NASDAQ is only down 84 handles right now. These things are bouncing around here. We've got 30 minutes to go. But all of these markets are going to go in this high level consolidation, aka a fourth wave. They're going to consolidate this thing, and there's another leg up. Now, when does that happen? I don't know. Maybe after the election. Okay, let's do this. We'll kind of hang out, watch this stuff on, let's go over to, I want to go over to the level 2. Yeah, see, we're still, if you look over at this, on the far left-hand side is the level 2 screen, and you'll see that it's still very erratic trading, very small numbers, 30 and 40 contracts on a bid or ask, and you'll see it just went like 200 points in one click. And this is the kind of stuff, there's just air pockets all around this thing. And I told you last night that we were going to see an expanded range on these markets. The volatility is going to blow up. Now that we've had 2 days like this, we're looking at, it could take maybe weeks for this thing to come. And listen, the algo guys right now are super pumped, because they haven't been able to run these algorithms. We've been saying that contracting. We got down, I think, one day to like 14 handles on the S&P. They couldn't turn the machines on. The machines run awesome in this. This is the kind of environment. So machines will be involved. There will be a lot of volatility. There's going to be a lot of randomness in this market. So if you do trade it, just keep that in mind. You see a profit, you take it. You look for your targets, you do your setups, whatever, trading the market grid, whatever you're doing, take the profits. So yeah, so it's interesting. We were just up, we were up a second ago, now we're down 20 handles. So this is exactly what I'm talking about. Very erratic trading, and this is just the way it's going to be. And it's going to be like this for, I said 5 to 8 days. It may be longer. Yeah, somebody's got a question on gold. Let's go over there and take a look at that. I'll try to be responsive, and then we'll watch. I do want to make sure that we don't miss the actual, let's say, last 10 minutes of trade. I want to be focused on that screen we were just on. Okay, but let's take a look. Yeah, gold for me, 42 doesn't mean anything. Gold here, we just brought, I'm bringing up the weekly gold, and weekly gold is 1922.70 is that moving average. We have a 0.76 on the PPM, 20% probability to close below 1922. We closed at 44. Last week we had a low of what, 08, I believe it was. Yeah, 08.40. This week we got a low of 21.60. So we went right to that 22 number and bounced. There was a fairly good bounce there for a day or so. And one of the things I talked about, thanks Gino, appreciate it, man. Yeah, I'll address your question here in a minute. Just give me a sec. But this pattern that's up there, as far as we're looking at the gold, this is going to be the floor. The moving average is moving. Let's just see what it's moving. It's moving at about $16 per week. So that number from 22 is going to be right where we close, right at the 40 level. So we're going to have support at 40 level. So whoever asked that question, if you're long this stuff, you can use that 10-week moving average as a guide. We'll take a quick look at the daily, and then I'll talk about. Yeah, so I mentioned in last night's commentary that a close over 50, 1950 would have been a positive. We didn't get it, but it won't take much to turn these PPMs up from here. That 50 close probably would have done it. A 60 is going to be the big pivot number. If we just look at the grid here, you're looking at the grid was, the range for today was 72 to 30. The low was 21. The S2 number was 1920.60, and then R2 was 1955. So we had an S2 R2 range for gold today. All right, so yeah, I just want to address Gino's question here. Yeah, the 40-day moving average will be that key play. It's also the 10-week. I assume we're talking S&P, right, Gino? Yeah, Hitman, I agree. This is going to be a great, for short-term 2 to 3 day swings. Probably will be a pretty good trade. Yeah, it's funny. Somebody asked, why did the market reverse today? And my wise ass comment would be more buyers than sellers. There were more sellers, and then the buyers came back. I just think this market has just got emotional, and and that's what a correction is, by the way. If you look at just the psychology behind corrective phases, wave 4s, wave 2s, if we throw in a little Elliott analogy here, is what you get that type of range and things become uncertain. That's why wave forwards happen. You get these zigzag formations, all that stuff. There's uncertainty, there's buyers, there's sellers, and it's a war zone. And then ultimately, if you're in a wave four, it's going to keep going up. If it's a wave four down, you get another low, all those type of things. Yeah. Oh, yeah. Oh, I moved my crystal ball. I should bring that up. Pretty funny, huh? People used to claim that I must have a crystal ball, so my wife bought that for me. So I thought that was very sweet of her. Anyway, but like I said, damn thing doesn't work. I look into it, I put it in front of charts, doesn't tell you anything. Yeah, look at Tesla trading up. Let's go to Tesla. Let's take a look at that. Yeah, okay. So I answered your question, right, Gino? Yeah, nice reversals. So the same pattern that I just talked about in Apple and all these markets, and I've been talking about this for weeks, that these markets they're all moving in tandem with each other, especially the mainstream cash flow in and out of the market. Because for me, looking at charts, looking at all the stuff that we do, looking at the market, of the database, all we're looking at is where's the money's going. Where's the money coming out? Where's it going? We're looking for cash flow, and cash flow has been big in this. We traded down. This is the daily. We traded just below the 21-day moving average. Now we're trading higher in the session by 3%, and if we close back above the 10-week moving average, what is that number? That would be crazy. 437. That would be a huge. 428 is the high, so we'd have to print a new high. We've got what, 20 minutes? Certainly possible. Yeah, I actually think the VIX is probably going to be. Let's go to the VIX. I actually meant to cover that last night. I was when I did the video. You already see it's collapsed. I was going to cover this last night. You guys would have loved it if I had. It was a late video last night, and anyway, but I think you saw just a spike on this. Let's see if we can zero in on a couple of things here. Let's see if we can make some sense out of this. Yeah, so on the VIX, this little block here, this was the June 9th. And we got this volatility spike in the market grid. And then look what happened here. Folks, this signal on the market grid, we closed over the RXT yesterday on the VIX. And like I said, I wanted to cover this last night, and I got done with the video. I'm editing the video. I'm like, really? I forgot to do the VIX. I actually have, yeah, on my little sheet here, this is my worksheet. Right here is the VIX. And I forgot it. Very disappointing. But yeah, so we closed above that. So now this thing's just going to flatten out here, and that goes hand in hand with the reversal. We did see a spike up, and then of course we've got a reversal working right now from that viewpoint. So, but this is probably going to end up to be, this little block over here will be similar. We'll probably see the I know I'm not very good drawing. We'll probably see the market grid might see a slight more increase where we get the market grid starts to expand out a little bit. But this thing's pretty much done, and I'm so disappointed I forgot to cover that last night. And the hypothesis that I was drawing last night when looking at this stuff was that this was going to be a very brief rally or sell-off. I said that last night. I think it's going to be very quick, and we're seeing that. Just trying to track this. Yeah, we're back down 25 handles here. We're all the way back to 34.29. So this thing is all over the board, just as I said. What we got? 15 minutes. So about 8 more minutes. We'll chat about some of this stuff, and then yeah. Yeah, Bot King, we actually put some swag together. We got some hats, and we're going to do the coffee cups. I want one myself. I'm trying to think. I don't have one. I did have this cup. See if we can get it focused. This was from a company. It was called AIQ. They're still around. They don't really do much anymore. But Dofpick came. It was about a concept I talk about: disciplined, organized, focused, patient, independent, and confident. And it's always been everything I've done for that was 1992. And everything I've done for a lot of years is all about having structure and all those type of things. So I heard a super chat, so I'm not seeing it on the timeline. But anyway, yeah, so these things are likely to continue just kind of going into a sideways range. We're going to see a ton of volatility. E-minis now down 30 handles. Dow Jones down 112. Remember, we were just up. Let's go ahead. What do we got? It's a little early. What else? Let's do another question if you folks have got something on your mind. Aloha. Yeah. Yeah, I'm just looking at. Yeah, I covered gold a few minutes ago. Yeah, let's take a look at Bitcoin. Let's do that, and then we'll spend a couple minutes on Bitcoin here, and let's see. I'm going to try to put a model on this. It was 1-2, I think. Yeah, so Bitcoin, I just put the models up here a little bit, just so we can take a look at that. There was a buy on Bitcoin at 93.67. It exited at 11,590. Actually, I've got the shorts on, and it got short here. I wouldn't take that trade on the short side, but the last exit, this was pretty good in this range. I would look for another setup. So we're still disappointed we haven't gotten a good data vendor for the cryptos. We just can't seem to find one that works well. Yeah, as far as you see, the grid has gone out here. Let's do a weekly grid because that will give you some idea maybe over the weekend if you're a trader. Yeah, see, we blew through everything. We just like the markets, although we're not seeing we're seeing a comeback, I guess, but it was pretty extreme earlier. So we're beyond the grid. We did go down to the 21-week moving average, just about 97.42. The low here is 97.24 or 99.24. So we didn't quite get there. We're still a couple hundred points off, but that is probably a good tag. And we got PPM1 up at a 1.89. So that's going to be your support line, 9,700. If you could if you buy against 9,700, probably a decent trade, but you're going to have resistance just above the market at, probably 10,008, maybe 11,300, somewhere in there is going to be pretty heavy resistance. So nothing really good there that looks visible. So let's go over. Let's go over and check out and hang out with this. So we're down 25 handles. We're back at 36, but I want to do something here. 1 second. So what I figured out is I can take the daily, I can see where the S&P is trading here. And so we're 28, we're 30, 34, 30. So remember the key numbers as we come into the close, we're about 12 minutes out. Yeah, Gino, no, thanks again for another super chat. And Billy Bob, thanks. Yeah, what we're looking at. Thanks. Wow. Thank you. Absolutely. Frugaholic. Thank you, man. Appreciate it. Nice chat. Nice super chat. But as far as the I think I tried to lay that out, Gino. I don't know if you were hanging around at the beginning of the stream, but I was talking about what the likely trading range is. We're going to go into a trading range, and until we see this next pattern, it's not going to be likely to figure out a lot of things from here. I'm still going through with the database as far as what's going on in the intermediates and those type of things. We're still in a general uptrend, and we're going to see a fourth wave form, broad range, and I'll define that as we go forward. Yeah, so 4 year investment, not a trade. Man, I wish I could figure that stuff out. In 40 years, I never figured out what the word investing means. Investment. No, that's a funny comment. I've been a trader all my life, and there's something that we'll have this little chat while we're watching this thing close. It's moving. They're selling it off again. The machines are out here big time. I'm telling you, folks. But we're back at 26 on the S&P. What was I going to say? Yeah. So here's the thing about making market predictions, and I've made a couple 2 to 3 year projections, and they've worked out really well over the time. And sometimes those things come in really visible. But here's the deal. Wow. 50 pounds, dude. Thank you. That's amazing. Thanks a lot. So, but one of the things about being an analyst, making so-called predictions, right? The longer out you look in the prediction, the more likely you will be wrong. Now, that's why day trading, you can make little short predictions. You're going to be that time increment has an issue too. But somewhere as you get out into weeks and months, 3 weeks to 4 months, those type of projections are really good, and do it just like I did on April 30th. I was able to, once in a while, these patterns set up just in a classic form. And once you get that and you're paying attention, you can nail these things. And they're not always there every day. They just set up, and you're looking. I do a methodical go through on the markets every night, the same way. I have methodology. So it's just like going into a lab and you're running a lab test on something, you always start here and you work your way through that. And that's how I do my analysis. I have for so many years, it's ridiculous. So you just get into that methodology and the flow, and then what happens is you see these things and you go, oh man, I saw that thing on 430. I figured out, man, we're going to 3,500. We're going to new highs. And I remember I had, I love the trolls. Thank you, Mr. Wright. Yeah. Yeah. No, I think, I think JP Morgan back in the 30s or something, his favorite line was, somebody asked him how he made so much money. He goes, I always got out early. And I think I really think I had on one of the chat lines, there's a woman named Kathy Wood, and she runs an investment firm called ARK Investments. And I don't know who said that. I looked her up. She made like 100 million on Tesla, and she got out early, right? She made 100 million for her fund for that. And that is, and for whatever reason, it stuck in my head, and I started researching that. And she's pretty amazing. I saw her in a TED talk, and I also in another talk at some symposium she was at when remember back in the day when humans can congregate in the crowd. I actually hope we get back to that phase, because what I want to do next year, I want to do like I want to do a conference, like a 2-3 day conference, get a bunch of people that I know would come in and really put on education and all kinds of fun stuff. I sure hope we can do that, because that would be like super fun. I love that stuff. We've always done national conferences. I don't want to do a virtual conference. We've been looking into it. We could do it because you have to, but that's the only reason why you do it. Yeah, it's funny. Is Jake hanging around? Is that where the JP Morgan silver market? I haven't seen him on the line, but yeah, he's filled my ear with the JPM silver manipulation thing, big time. Yeah, so there you go. She got out a week ago, but watch that. She's got a real insight into the world. I'm super impressed with her. I've become a fan. So what's that, Tobias on Phoenix AZ? Yeah, she is absolutely brilliant. Yeah, I have no disagreement there at all. Thanks for the super chat, Deflin. Thank you. Really appreciate it, man. I'm glad things worked out. Oh yeah. Oh yeah. Absolutely. Probably Scottsdale. That's where we usually do them. Absolutely. I don't know if you've. Yeah, I'd love to do it. We actually have a conference center. I think we'd have to get something bigger. We have a conference center. We get about 350 people. I think we could get literally a couple of thousand folks to hang out. It would be absolutely awesome, and really do something really cool. And I've got some really cool friends that I would like to bring in. I've talked to them all about it, several of them anyway, not all, but I'd really like to bring in some real expertise into the community and just kind of expose everybody from the views of the likes, maybe like Hugh Hendry. He's spoke at some of my events in the past, and just bringing in those guys. Who knows, maybe Raw Paul or some of these characters out there. I don't know Raw, but Hugh knows them real well, so it's an easy introduction for me. And I've got some other folks that I just hope, hey, listen, as a vaccine, I don't know if we got to put this crap in our body or not. I'm an older guy, so certainly it looks like I'm at risk. If you guys in your under 50, it's like not that big a deal. I had H1N1, damn near killed me for real, in 2016. Yeah, and Bot King, I agree, man. This is, you guys, I don't want to get too corny here, but this is a way cool community that we're building here, and it's the beginning. I think we really got something going here, and like I said, I've done 4 live streams. I love doing these things. I'm gonna watch the markets anyway, so why not hang out? So we are down to the last 3 minutes. We're looking at 31, 34, 31. So I set this up earlier. Is that, thanks, Billy Bob. Appreciate it. Yeah, there's man, I promise you guys in the next week or so, I'm boxing myself in a quarter. We will do this screen that I have up right now. We will do a short-term trading. I revealed like that little 3-day trade that we put out on Apple. Watch that video. There's some criteria there, and that works for an up reversal, down reversal. But I get a crazy amount of trades like that. I'm a bar chart freak. I don't use candlesticks. You guys know that, and candlesticks to me clutter. I just don't like the view for whatever reason. I like the old school stuff. Thank you, man. Appreciate it. I'm just old school guy. I like the old high-low close bar. It's good. So let's go to the markets. Final minute. Here we are. I'm going to bring this back on screen here. 27 trades. Now, and the key, and I talked to folks about this. I think who knows? I've done so many live streams this week, but this close, especially after a day like today, is so important. This minute we're seeing right now, still illiquid. There's not a lot, but the way this closed, and it's the action in the 2 minutes after the close that you want to watch really closely here on the futures. This is where right now what you're saying, and it's weak. The institutions in the last 10 minutes are the major players. Those are the ETFs and the mutual fund guys that have buy and sell orders. And we're not seeing any massive amount of sell orders come in, especially on a Friday. So that's somewhat encouraging. Markets closed. Now let's watch how they trade. So watch the chart on the futures. We closed at 26.82. So for my liking, that's a good close. I like that close. We closed above that 21 period moving average. Yeah, man. You're welcome on the Apple trade. Absolutely. Yeah. So pretty stable. This is one of the elements I always look at, and there's nothing here. I thought we might get a little more activity. This is reasonably stable. Looks like 27.75, 20, around 25.50 is the print, very tight range. And so no short covering, nothing going on here that would tell you there was any major event, especially on a long weekend. I kind of built up this long weekend trade throughout the week on my daily videos and those things. And yeah, it just is what it is. We're just looking at, we're looking at a nothing trade here. I thought there'd be more activity. And so everything's squared up. So this is actually a good point here. So if you were a mutual fund guy and you knew, depending on when people queue up the orders, they see when these orders come in. Now they execute them on the NAV. They know that they have to rebalance the mutual funds, ETFs, all those order flow. They know about most of the order flow hours ahead of time. Okay. And they set it up. And when if they know they've got, they're going to try to position some of these sell orders ahead of time. Some of these things are put out in the futures. That's why I watch the futures, where they'll hedge the futures, they'll sell the futures and sell the cash in that last couple minutes. And you'll see a lot of just a barrage of activity on the close. and you'll know that's what's going on. And we didn't say anything. Like I said, we're now printing down to 25, but that first 2, maybe 3 minutes is the key to this thing for sure. And yeah, so that's it. Well, listen, folks, I'm glad we got to hang out a lot this week, right? We did the Wave Tech training on Tuesday, and I keep encouraging you folks because I understand the the power of what we're offering to you folks, and I hope you guys will go and 2 things: hang out. I'm working on putting Market Grid out. Sign up, go to thekindlereport.com and just give us your name, email, so we can send you some information on the grid when that's coming out. And then there's also there's also some product stuff that we have that I feel really strongly about, and I show it to you every night on the channel. Bear with me 1 second, just. Okay. Vincent, thanks a lot, man. Appreciate it. Yeah, so Chris P. Yeah, no, this is exactly what I was talking about, is that these kind of volatility, becomes the uncertainty, and this is the correctional phases, and it doesn't mean that this is happening, that there's a major collapse. So in a couple hours, those folks that are on the WaveTech tool will see what kind of ratios we get out of the database. We saw on the daily database just absolutely dump 5,400 symbols and just puked out the database. Well, I don't expect that to happen on the weekly, but there could be some sensitivity. Like I said, we could see 4 or 5% drop in something like that. Yeah, folks, I don't know how many likes we got, but yeah, go ahead and hit that. Let YouTube know that you guys are enjoying this. We didn't get quite up to 1,000 viewers today, I don't think. I saw about 800, but I appreciate everybody coming. Have a great holiday, those of you in the U.S. here. It's barbecue time, I guess. I guess some of us can congregate a little bit together, right? So, yeah, pretty amazing. We did drift lower on the futures here, but there's nothing there, and that's pretty surprising after a day like today. So that reversal pattern, everything looks like it just washed its way out, and that is yeah, that's good. So yeah, so I guess also you probably should click on the bell if you want to know when this stuff is coming up as well. Yeah, Bobcat. Yeah, as far as I think we saw the low on this thing for this particular move. We should see a move back to 35.15, and I'll be able to. Monday night's video will have this all nailed down. Yeah. Anyway, yeah, it'd be like I said. I hope we can actually put a conference together next year. That's my goal for 2021, is to have a nice big conference, and You know, it would be super fun, I think. And just to be able to hang out, and I'd love to get to meet a bunch of you guys. It'd be awesome. Really would. So anyway, uh, yeah, Grandpa Bob. Yeah, for sure, man. And I feel very lucky. You know, I'm 68 years old and I love this stuff and I don't have any intention of retiring. Um, yeah, hopefully soon with some of the efforts I'm making, you folks will understand. And yeah, so we're still drifting here on the futures. We're down to 20, basically went out 25. So we drifted about 5 points. Let's see exactly where we closed on the minute. We went out at, yeah, 34, 25, 25. So we're about 5 lower right now. Yeah, how cool. I actually want to meet Kathy Wood. Like, yeah, I want to meet that woman. She's amazing. Yeah, I just, yeah, there's just like some really cool people I'd love to bring together and actually, you know, when, I don't know, it's just a whole thing that what we're trying to create here is really special. We are working on putting just, I always do this stuff at the end of this thing. How many? We got 626 on, so there's quite a few people. We're putting together, we're working today, actually, when I get done with this, we're working on a Facebook group that we want to put together. We think that's going to be a really good place for us all to collaborate and to share information. And we really want to build it around WaveTech, the channel, all that kind of stuff, and really start to build a nice community. And hopefully you folks can bring in your friends and we just grow this whole thing out. And then the other nice thing about Facebook is it give us some ability to do, we're planning on cropping out a lot of video content that I've already created. And especially on some of these live streams, there's moments. I know on Wednesday, last week and this week, I had some pretty epic moments from talking about educational moments to some other things that I do. Not yet, Snook. It's pretty funny. Yeah, so that's pretty funny. Somebody's like, let me go so I can go to the bathroom. I used to go on, this says, we'll close with a story. Back in the trading floor days, especially Chicago days, in the bond pit, if you had to get there an hour and a half early to get your position in the pit, and if you didn't get there, then you didn't get your spot. It wasn't like you had a reserved seat. And so the other thing is, if you leave, you know, if you have to go and relieve yourself and you leave the pit, you're never getting back where you were in some of these big pits. I mean, Walter Payton used to be a member on the Chicago Board of Trade and he used to come down on the floor once in a while. He owned a seat. And anyway, Walter Payton couldn't have gotten into the pit once that thing is locked down. So the joke was nothing by mouth before the open. So you had to make sure you didn't set yourself up for a disaster and lose your place. So anyway, yeah, Gino, yeah, do I have him here? Hang on. I have got like a book I just got, so we'll close out here. I just got this book. I'm going to spend like 5 hours with this book this weekend. At least that's my plan. But I'll show you the books I showed you yesterday. There's one. This guy I guess just died like a couple of days ago. David Graeber, a book called Debt. I know this stuff is, yeah, anyway, it doesn't look like it's focusing very well. But anyway, the book called Debt by That Works. There we go. Debt by David. This is an amazing book. 5,000-year history of debt. There's another one that's really good. I think Bernstein wrote it. It's called Against the Gods. And if you love math and you want to understand, that's one of the best books ever. And if you're trading markets, I read that book many, many years ago. It's insanely good. Princes of the Yen. I need to get affiliate links. I need to be like Tai Lopez or something, right? But Princes of the Yen, excellent. There's a video on YouTube on this thing. And this is the book I'm hanging out with this weekend. I've got a green screen on, so it's filtering it, but The Invincible Company. And this thing is insane. It has all the major business models, strategies. It's like really cool. And yeah, anyway, I'm trying to do this new corporation thing someday. So I've got big ideas and big plans. But yeah, look, we're trading 17 on the futures here. We're 2 minutes. We might as well hang out to the futures close. But yeah, so that's my weekend. I'm like super pumped on this long weekend actually, because I've got a bunch of stuff that are going to do. Okay, that's too much. I can't handle that. Yeah, that's really funny. Garden chick, that's really funny. Anyway, you just don't know who anyone is on internet, right? Yeah, I got to be nice here. I'm not a fan of John Carter. Anyway, I'll just leave it at that. You know, if he's saying that, I'm going long. I don't like people that hype trades. I know he had this big hype video out there on the 3.7 million trade. A buddy of mine sent it to me. Anyway, yeah. I worked with guys that made that trade look small. Okay. One of the original partners and the core business that I started years ago was the largest trader on the Pacific Options Exchange. I won't say any more than that, but yeah, they made a lot of money, like $1 billion. Okay, for real. So anyway, yeah, it is Against the Gods. Absolutely. It's on my bookshelf. I'd have to leave my desk, but it's right over there. But yeah, no, there's some really, really good stuff. And it's good hanging out. We did a lot of this week, and we had, I think, some really productive sessions. So anyway, folks, have a great weekend. I'm going to go ahead and sign out, and we will talk to you soon. Like Monday night, you'll see us. And then guess what? I guess we do Monday night video, and we're right into Tuesday live stream for the Wave Tech stuff. And I didn't put it on the screen, but I probably should have. Is here, I'm going to put it on while I'm talking here. This is where you go to hang out and to get involved with us. Become, and I appreciate some of these super chats, but the money that you spent, you could have signed up for this and had access to all kinds of stuff. And I would just tell you, rather than super chatting, that's awesome. I'm not going to turn the money down, but sign up for this thing. It's $97 a month. And you get access to all the database and a lot of things. And yeah, and there's more to come. That's what I can tell you. We're working on bundling, market grid, a whole bunch of stuff together right now. So anyway, folks, have a wonderful long weekend for the US folks and whatever you folks are doing in Europe and about Singapore. I know I've seen folks all over the place. just have a great weekend, and we'll see you on Monday night for those in Europe, and then Tuesday morning for everybody in the US that comes in and watch the videos. Thanks again for watching.